Why does breadth matter? I think it matters for a couple of reasons. And just in case you're like, what's breadth? In this instance, really all it means is what is the level of participation in stocks in the rally? Because today, this very moment, we're at another lifetime high on the NASDAQ, be it the composite or the 100, prices never before seen in human history. And of course, all led by Nvidia, a stock nobody cared about 2 years ago, but now it's the only stock people care about. But the breadth is not there. There are thousands of stocks out there. Fewer and fewer and fewer of them are actually participating in this nosebleed rally. So why does breadth even matter? Well, if you bought Nvidia last October, put all your net worth into it, God bless you, you've done great, and breadth doesn't matter, not one bit. You've done fantastic. I doubt that's the case, though. Why it matters is, one, opportunity, because like in my own case, I'm looking for the rot. I'm looking for the places where it's basically cheap to be bearish. VIX is like at 11, which is hysterical. Volatility is historically low, and nobody's looking for bearish opportunities. Nobody's looking to short because that just ain't the world we live in. I have 8 positions in my portfolio now. All 8 are bearish, all 8 are profitable, and they're not profitable by 2 cents. I just looked, the average profit is 28%. That isn't bad on a day when we're at lifetime highs. And it's lovingly bound by way of charting, because these particular positions are not bullish. They're very vulnerable. The other reason I think breadth is important is because it's sort of like walking on the floor of a house. And unbeknownst to you, more and more of those floorboards are rotting from beneath you. You just can't tell. As far as you're concerned, the floor is fine. And the equivalent of the floor is basically the headline of USA Today talking about lifetime highs in the market. Things seem fine on the surface. There will come a point where you fall through the floor completely unexpectedly. And in terms of this market we're in right now, the one giant joist, is that the right term? I'm not a carpenter. Let's just call it a floorboard because I'm ignorant. The one mightiest of floorboards is Nvidia. When that gives, ain't nothing else matters, because that's holding everything up. I looked at a chart. If I understand it properly, the amount of shareholder value that Nvidia has added this year is larger than the bottom 493 stocks of the S&P 500's gains. That's amazing to me. Virtually every single stock in the S&P 500, add up all their gains, that's smaller than Nvidia's gains in the same amount of time. So it's king. It's the king. It's predicated upon the notion that AI is going to change the world, AGI is going to be real, and ain't nothing else going to matter. And they're the only game in town, weirdly. That's the other odd thing. It's as if cars came about in 1920 and Ford was the only car company on the planet. It's bizarre, and it ain't going to last forever. Nvidia is not going unnoticed by others that want to get in that game. So that's why breadth matters, I think. It's opportunity and risk, really, for those who are depending upon the glossy sheen of what appears to be a very solid footing. Let's jump into some charts together. We begin, as we always do, with the spider. The past 3 days, we've just been hanging out in the same place, the midline. I talked about the midline at length on Wednesday, and to good end, because we've been stuck there ever since Wednesday, Thursday, Friday. Look at that. We're just clinging. At this very moment, we're like exactly to the pixel at the midline. When will you know there's trouble ahead? You will know there's trouble ahead when we cut below the high from Tuesday. This fella right here, this gap. Ring the bell at that point. That's an important sign. We're not there yet. Maybe we'll never get there. Maybe we'll get to 10,000 on the S&P. But cross below that, and that's a pretty big yellow flag, I would say. In sharp contrast to this is the small caps. Now, after the risible CPI came out Wednesday morning, we went blasting higher on the Russell and really reached the kinds of levels, the highest levels we've seen just about in 2 years. And then it fell, and then it fell, and then it fell. The small caps, I think, since they're not Nvidia, are sort of representative of the actual behavior, what's going on beneath that surface, the aforementioned rotting floorboards. EFA more than 1%. And it's pretty cool because we've got two big old gaps here. This is Wednesday. Gap was created between Wednesday and Thursday. And then yet another gap was created between yesterday and today. So we've basically, all these weeks and weeks of trading, we're beneath all of it now. We are below, it's not much of a pattern, it's really just more of a range, but we are below this tidy little area, everything above that dashed red line. Deal with Nvidia again here. Here we are. Now I've made this chart a bit more liberal. Until like an hour ago, I had a lower trend line here, and this is still the same one, and then an upper trend line up here, which was at an angle, and it was anchored to like this, and then over here. There was one big problem with that. Frankly, the prices just kept going above that line, and in that case, the line has no business being there. What I've done instead, and I'm not completely married to this, is I've made this a channel instead. In other words, there's an exactly perfect parallel set of lines. The reason I'm not crazy about that is that it didn't work last time. We terminated the rise here and fell like so. The jury is still out on this. But I call this liberal because it allows for a lot more appreciation in Nvidia before it stops. You know, because we're kind of in an era of lifetime highs every day, and this suggests it continues for weeks or months to come. I don't know. Maybe it's just wishful thinking. That doesn't really ring true to me. But we'll leave that there for now. It's the best I'm going to do at the moment. And not all the semis are participating. The one I keep mentioning as very vulnerable is AMD. Advanced Micro Devices. Zooming in here, I would say that a nice tight stop on this, a very tight stop actually, would be just at yesterday's high, 162.66. It just, you know, if you have a situation, Nvidia, I'll put it to you this way, AMD is the same price now as it was in November 2021. You cannot say that about Nvidia. I'm not going to go back to the chart, but I assume Nvidia in November 2021 was a fraction, maybe a small fraction of its present price. AMD is flat 2022, 2023, half of 2024. Net, no change. Plus, its PE is in the hundreds. Something to keep in mind. SMH, thanks to Nvidia, because Nvidia is by far the largest component, continues to go green, but this trend line is still doing a proper job. It is still Wednesday, Thursday, Friday. It's where the price is right now. It's holding at that level. And so I've still got SMH puts. It's an aggressive position as far as time goes, because it's like July 19, whatever the expiration date is. You may be wondering, wait, he just said 8 out of his 8 positions are profitable. That's true. I'm not fibbing you. I have a small account, a personal account, where I have one and only one. It's just kind of a mad money sort of thing. But I bought yesterday and then today a few SMH puts. Call it a spiked trade. It's not my normal portfolio, and it's down, obviously, about 8-9%. We'll see, but that's SMH. Energy continues to be my favorite because it's, you know, kind of goes back to that whole breadth argument. There are definitely sectors that are not participating in this. And I've mentioned these over and over and over again as two favorite charts. This one in particular, APA, down almost 3%. And, you know, talk about fundamentals. The PE, it's 3. You know, this seems like the bargain of a lifetime. Doesn't matter. It's the chart that matters. I don't know what the 3 means, what it really means. I mentioned the multi-hundred thing on AMD just because I kind of consider it curious, but it's not the basis of the trade. The basis of this is that we have failed multi-year support with a beautiful right triangle pattern. So down it goes, 3% on that one. And then my almost his favorite, but not quite, is Schlumberger SLB. Not nearly as nice a pattern, but it's down 2 1/3%. So yay, throwaway long idea. I don't really believe it. I'll just say it. Birkenstock, get out your patchouli oil. It's a lifetime high. It's, you know, why am I showing this? It's okay. It's a very young chart, not much to go on there. But I will say the ones we've mentioned about kind of the lifetime lows, beginning lifetime lows, those just keep on keeping on. It's really cool. Unity Software, this is the one you've seen again and again and again. Down again, lifetime low over 2.5%. Eventbrite, this was a newer one I mentioned a few days ago in the same light, down over 7%. Looks like maybe a lifetime low close on that one. And this one too, here's a new one for you. Quantum Scape, down about 2.25%. Big old head and shoulders pattern on that. Does not matter that it's near the bottom of the chart. That's the general point of these particular examples. And those would be Apple and Tesla. Apple is down at the moment, but it's had a very good week On Monday, they did their WWDC thing. Nobody seemed to care. The next day, people suddenly cared a whole lot. So they've done wonderfully well. And this line here represents new support for Apple. So Apple just lit the world on fire. Tesla, it was more of a lot of smoke and no fire in this one because Elon got exactly what he wanted. Approved to move from Delaware to Texas. Good job, Chancellery Court of Delaware. You know, it's like your one thing, Delaware, is to have corporations, and he's made a giant, you know, so not a good precedent for you guys. He got the blessing from the shareholders in a big way about his giant deca-billion-dollar pay package. In spite of all that, I mean, good for him, but the stock ain't done nothing. We're basically, we had a sharp zap higher yesterday. It's gone. So our Fibonacci friend continues to rule the roost.